Hello, my dear students. Welcome back. Hope you guys are all doing good. Hope you're all perfectly fine. So, let us now start discussing one more standard on audit. So, in the previous session, we are done with SA 250, in which we have understood all the technicalities associated with SA 250. So, like we have seen, SA 250 talks about laws and regulations. So, all these things we have covered. So in this standard, we are going to take up one more standard for our discussion. So we are going to start now SA 501 we will be starting now. So what is the standard which we are going to take up now? So we are going to take up SA 501. So let us first try to understand what does this standard talk about. What is the objective of the standard? Like in the previous session, I have mentioned it is very important for us to know what is objective of the standard, what is the purpose of the standard, why the standard has been given. That is the most important thing which we need to have a clarity. Without understanding objective of the standard, without understanding purpose of the standard, no matter how many times you read the standard, no matter how many times you watch anything regarding the standard, that understanding will always be incomplete. So that's why here also let us make ourselves very clear what is the purpose of this standard, why this standard has been given, what is the objective of the standard. So if you have a look at the title of the standard, this standard is going to talk about audit evidence, specific considerations for selected items. So what is the title? Repeat everybody along with me. So the title of SA 501 is audit evidence, specific considerations for selected items. So what does this standard deal about? This standard is going to talk about audit evidence. SA 501 is a standard. From the title, it is one thing is very clear. This standard is going to talk about audit evidence. But you all will say, sir, we have already covered a standard regarding audit evidence. See, when we understood audit documentation and audit evidence chapter, so in that, whatever content we have discussed regarding audit evidence, that has actually been taken from SA 500. So I already mentioned that SA 500 is going to talk about audit evidence. Now a question will come to you, sir, when we already have a dedicated standard SA 500 talking about audit evidence, what is the purpose of SA 501, sir? You are saying once again SA 501 is also talking about audit evidence. But in fact, in the earlier sessions, you have told SA 500 is going to talk about audit evidence. Now you are saying SA 501 is also going to talk about audit evidence. What is the difference between the two? See, the difference between the two is SA 500 talks about audit evidence in general. SA 500 talks about audit evidence in general. What is the meaning of audit evidence? What are the various types of audit evidence? What are the various audit procedures? And what are the various methods for obtaining audit evidence? So like this, audit evidence, SA 500 is a standard which is talking about overall audit evidence in general. However, SA 501 is also talking about audit evidence, but it is not a general standard. It is a specific standard which is trying to give you special guidance for a few selected items. So what the SA 501 is trying to do? SA 501 is also trying to tell you how to obtain audit evidence only. Sir, SA 500 already says it, no, it is telling us various methods to obtain audit evidence, types of audit evidence, from where we will get the audit evidence. That SA 500 is also already telling it. But the difference here is SA 500 is a standard on audit which is talking about audit evidence in a general manner. It talks about overall audit evidence. However, SA 501, it is also talking about audit evidence, but it is not a general standard. It is a very specific standard. It has selected a few items, and the standard is going to tell us what special considerations we need to keep in mind while we try to obtain audit evidence regarding selected items. If I have to express in general terms, so what SA 501 has done is it has identified three matters. It has selected three items from the financial statements. And SA 501 is going to give us a guidance how specifically we can obtain audit evidence regarding those three selected items. Special considerations that we have to keep in mind while we are trying to obtain evidence regarding selected items. So SA 501 selected three items from the financial statements, and what special considerations we have to consider, or what specific things we need to keep in mind, or how to specifically obtain evidence regarding those three selected items only. SA 501 will try to give you guidance. Sir, why only three items are selected? That is up to ICA. They might have thought that those three items are the items which are very complex while conducting the audit. So that's why they might have given that. That's why they might have given specific guidance only for the three selected items. First of all, let me put before you what are the three items that are selected regarding which specific considerations are given. Number one, in order to obtain evidence regarding inventory, existence and condition of inventory. Number two, litigations and claims. Number two is what? Litigations and claims. And number three is segment reporting. Number three is what? Segment reporting. So these three are the items which are selected. Sir, why only these three items? It's up to the standard. It's up to the institute. It's up to that regulatory authorities like ICI, IFAC. So they have decided that these three items might be those items in the financial statements where auditors might face a lot of difficulty in obtaining audit evidence. So they have given one dedicated standard SA 501, which is talking about or which is giving us some special things we have to keep in mind, or specific instructions SA 501 is giving us, which we need to keep in mind while we are trying to obtain evidence regarding these three selected items. Understood? Clear, everybody? Understood the difference between 500 and 501? So SA 500 talks about audit evidence, but it is a general standard talking about overall audit evidence in a broader way. However, SA 501 is also talking about audit evidence, but it is a specific standard. It is talking about only how to obtain evidence regarding only three selected items. What are those three items which are selected? To obtain, how we can obtain audit evidence regarding inventory, how we can obtain audit evidence regarding litigations and claims, and how we can obtain audit evidence regarding segment reporting. Sir, why only three? Why only these three are selected? That is not required for us to discuss. We are only required to keep in mind SA 501 has selected these three items and how to obtain evidence regarding these three selected items, that they are giving us special instructions which we need to keep in mind. Understood? Now clear about the title of the standard, objective of the standard, everybody clear? That's all, guys. This is what the purpose of the standard. Since now we are very much clear with what is the purpose of the standard and what is the difference between SA 230 and SA 500, SA 500 and SA 501, now we can go ahead and try to understand technicalities which are mentioned in the standard. So first, let me take you through the objective. As per SA 501, the objective of the auditor is to obtain sufficient appropriate audit evidence regarding three items. That means this standard is trying to help the auditor to obtain sufficient and appropriate audit evidence regarding three selected items. What are they? Number one, existence and condition of inventory. Number two, completeness of litigations and claims involving the entity, and also presentation and disclosure of segment information in accordance with applicable financial reporting framework. So these three items are selected and the standard is trying to help us out how to obtain sufficient and appropriate audit evidence regarding these three selected items. Understood? Now we will take up each item and we'll try to understand in a detailed manner what does the standard say about. So first item which we will pick here is existence and condition of inventory. So what the standard is going to say about existence and condition of inventory, how we can obtain audit evidence regarding existence and condition of inventory, let us try to understand. So now we are going into the technicalities of the standard. So first we will start with inventory. So as we all know, inventory is significant item in the financial statements. It is a forming part of significant item of balance sheet. So when you look at the balance sheet of the companies, especially when you have a look at manufacturing entities, trading entities, manufacturing and trading entities, generally in service oriented industries, you will not be able to find much of inventory. If you take IT company, software company, for software company, what inventory will be there? So mainly inventory will be a significant item in the financial statements of especially manufacturing entities and trading entities. And when you have a look at the balance sheet of some companies on the assets under current assets category, in almost all manufacturing, in all the manufacturing and trading entities under current assets, one main asset which you will always be able to find is what? Inventory. There will be inventory in the balance sheet. Now, when you are conducting audit of some entity, assume this is the company X Limited. You are conducting audit and in that balance sheet, there is an item called inventory. Certain amount has been stated. Assume that inventory amount was 1 crore rupees. Now, when I have to express opinion on the financial statements of this company, I need to obtain sufficient and appropriate audit evidence that each and every item do not contain a material misstatement. Overall, I have to express opinion on my financial statements, whether financial statements of this company is giving true and fair view. For that purpose, whatever various items of the financial statements are there, various items of P&L, various items of balance sheet, I need to obtain audit evidence whether all these items of the financial statements are genuine or not. So obviously, as a part of my audit, if I have to express my opinion, I need to obtain audit evidence whether this inventory value which is stated in my balance sheet, is it correct or is it containing any material misstatement? Definitely I need to obtain audit evidence. Sir, but how, sir? What and all I can do to obtain audit evidence? That's what we are going to discuss now. Understood, everybody? And this standard is talking about, they are not just saying try to obtain audit evidence regarding inventory, but instead they say that you have to obtain audit evidence regarding existence and condition of inventory. We need to obtain audit evidence regarding two things. What are they? Existence and condition of inventory. We need to obtain audit evidence regarding existence and condition of inventory. Let us try to understand what is the meaning of these terms existence and condition of inventory. So let us try to understand it this way. So assume that inventory, in our example, it was shown as 1 crore rupees. As we all know, what does AS2 say? How to value inventory, how this inventory value would have been derived. So we all know the principles of AS2. AS2 says that stock has to be valued at cost or NRV, whichever is lower. Assume that this 1 crore was arrived by doing some calculation. There will be some background calculation how they arrived at this 1 crore rupees of value. I will give you that background calculation also. So how this inventory value will be arrived is, first you have to determine what is the quantity of stock. What is the quantity of stock as on 31st of March of the year? As on the balance sheet date, what is the quantity of stock you have to take? To that, you have to multiply per unit, you have to determine what is cost. Per unit, you have to determine what is NRV. Whichever is lower, you have to take, and that cost or NRV, whichever is lower, that you have to multiply with quantity of the stock as available on the balance sheet date. Take for example, there is 10 lakh quantity of stock. 10 lakh units of inventory are there. Quantity of stock I have determined. Now, per unit, I need to determine cost. Per unit, I need to determine NRV. So, cost is 11 rupees. NRV per unit is 10 rupees, whichever is lower. So, I will take 10 as a value, cost or NRV, whichever is lower. So, now if I multiply this 10 lakhs with 10 rupees each, this is how the 1 crore rupees of inventory value has been derived. So I have verified the items of the financial statements. I am able to see inventories of 1 crores of value. I got the background calculation. This is what the background calculation I have got. 10 lakhs quantity, cost or NRV, whichever is lower. Cost is 11 rupees per unit. NRV is 10 rupees per unit, whichever is lower, 10 will be lower. So 10 lakhs into 10, if you multiply it, you will get the inventory value as 1 crore rupees. So this is what the background calculation. Now I want to obtain audit evidence. I am an auditor of this company. I want to obtain audit evidence whether this 1 crore rupees of inventory value, which is stated in the balance sheet. So as an auditor, I want to obtain audit evidence, whatever value which has been shown in the balance sheet. What is the value shown in the balance sheet? 1 crore rupees has been shown as value of inventory on the balance sheet. Now I want to obtain sufficient and appropriate audit evidence whether this 1 crore rupees of value is correct or not. Now, to know whether this 1 crore rupees of value is correct or not, that depends on two things. The quantity, whatever you have used in the valuation, this quantity should be correct. Cost or NRV, whatever you are using, that cost or NRV should have been determined correctly. So, in order to determine whether this 1 crore rupees worth of value of inventory, which is shown on the balance sheet, whether it is correct or not, that depends on whether the quantity which you used in the valuation of that inventory, that quantity is correct or not. I need to obtain audit evidence. Then cost or NRV per unit, whether it has been determined correctly or not, that I need to obtain audit evidence. When I am able to obtain evidence regarding these two things, yes, obviously inventory value will be correct or not. I can judge it. See, in this also, determining cost is very easy. Determining cost is not that difficult. Determining cost is not that difficult. Whereas determining NRV is a bit difficult. See, cost you can easily determine from the cost records or books of accounts. But NRV is what? Estimated selling price minus estimated cost of making sale. So determining the estimated selling price of the stock is little bit difficult. So now they are saying 10 lakh quantity of inventory into 10 rupees NRV. This is how 1 crore has been determined. Now I need to check whatever quantity of 10 lakh rupees they have used in the valuation of inventory, whether this 10 lakh quantity is existing with the company as on the balance sheet date. whatever quantity they have used in the valuation of inventory. How much quantity they have determined for valuation of inventory? They're saying 10 lakhs quantity is there. Now I need to obtain audit evidence. This much quantity of stock which is used for valuation of inventory, this quantity of stock is existing with the company, that too when? As on the balance sheet date. So as on 31st of March of the respective financial year, whether this much quantity of stock is existing with the company or not, that I need to obtain audit evidence. That is what existence is talking about. So when I say you have to obtain evidence regarding existence of the inventory, what do I mean? Whatever quantity that has been used in the valuation of inventory, that much quantity of stock is existing with the company as on the balance sheet date, that I need to obtain audit evidence. So if I obtain audit evidence, yes, this much quantity is existing. Very good. Next, I need to determine whatever NRV that has been used for the purpose of valuation, whether that NRV is correct or not. See, whether NRV is correct or not, that depends on condition of the stock. Whatever NRV that has been used for the purpose of valuation. To determine whether that NRV is correct or not, we need to pay attention to, or NRV of the stock depends on condition of the stock. Sir, what do I mean by condition of the stock? Very simple, guys. Assume that condition means the quality of the stock also, you can say. Is it of normal quality, or is it of inferior quality, or is it of damaged quality? See, condition of the stock will fluctuate its NRV. The NRV will be changed on the basis of condition of the stock. Very simple example I will give you. If you take the vegetables and fruits. So assume if you take apple. See, apple, the day it is brought to the market, fresh. Today only it has been cut out from the crop. Today itself it has been brought to the market. The day it was brought to the market, assume each apple will cost you some 20 rupees. Condition is very good condition, superior quality. So very good condition, you could sell it for 20 rupees. One day passes. For example, apple has been brought to the market. One day is over, one day expired on that. Now what will happen to the value of the apple? It will get reduced. Why? Because the condition will get deteriorated. Now it will be selling at 18 rupees only. Assume the crop has been brought to the market and it has already been 5 days. The crop has been cut from the trees and it has been brought to the market. It has already been 5 days. Now you will be able to sell it at even lesser value. Now you might fetch only 10 rupees. Assume 1 week has gone from the time the crop has been brought to the market. You have to sell it at some 5 rupees only. If 5 more days passes, then you can't sell it. You have to throw away it as a scrap or feed it to the animals. See here, whatever I am telling you, know, on the day it has been brought to the market, the apple which will fetch 20 rupees. 1 day passes, it will fetch 18 rupees. 5 days passes, it will fetch only 10 rupees. 1 week passes, it will fetch only 5 rupees. This is all nothing but NRV. This is all nothing but what? NRV. And if you see here, according to what NRV is changing? NRV is changing according to the condition of the stock. According to what NRV is changing? NRV is changing according to the condition of the stock. So if you obtain audit evidence that condition of the stock is correct, then you can judge whether the NRV used in the valuation of the inventory is correct or not. Able to understand? So when I say you have to obtain evidence regarding existence of inventory, I am talking about quantity of stock. When I say you have to check the condition of inventory, I want to obtain evidence whether NRV used in the valuation of inventory is correct or not. See, determine regarding cost, you need not break your heads. Determining cost is very easy. You can easily calculate it from the books or cost records. Where all the difficulty lies in determining what is the quantity of the stock, whether that quantity which is used in the valuation is correct or not, and whatever NRV that has been used for valuation of inventory, that is correct or not. So existence, when I say you have to obtain evidence regarding existence of inventory, you are trying to obtain evidence regarding quantity of the stock. When I say you are trying to obtain evidence regarding condition of inventory, that is you are trying to obtain evidence regarding quality of the stock. Is it of normal quality or inferior quality? Why? Because the condition of the stock will fluctuate its NRV. So if you want to obtain evidence whether inventory is correct or not, you need to obtain evidence regarding quantity. That I call it as obtaining evidence regarding existence of stock. And I need to also obtain evidence whether NRV used is correct or not. When I say you have to obtain condition of inventory, I am expecting you to obtain evidence regarding NRV used is correct or not. Able to understand? See, one simple heading, but this much background discussion will be there associated with each and every term in the audit. See, this is how you need to have the conceptual clarity. See, if you just mug up the sentence, try to obtain evidence regarding existence of stock, condition of the stock, who will teach you all this background concept? So this is the way you have to interpret, this is the way you have to learn the audit. Practicality today is very, very important. If you don't have practicality, what will happen is, today the question paper pattern itself has become so difficult that unless you have a holistic approach of understanding the scenarios, or unless you bring the practicality in analyzing the concepts, you will not be able to understand the questions in the examination. Sometimes you will read the question and totally blank. You will not know what he is asking in the question only. So today, understanding concepts from the practical perspective is very, very important. That is how that is what the entire focus of my classes. So I will teach the entire class completely from a practical perspective, so that you will not face any difficulty when you go and sit in the examination hall. That is a complete objective of the classes which we are taking up. Hope everybody got clarity. So one thing we have understood, title we have understood, that we need to obtain audit evidence regarding existence and condition of inventory. But the question is, sir, how we can obtain evidence regarding existence and condition of inventory? That is what the main part, no? See, just I was explaining, what do you mean by existence of inventory? What do you mean by condition of inventory? I did not come to the main point yet. What is the main point? Okay, sir, we understood what is existence, what is condition. But how to obtain audit evidence, sir? That is what the standard is going to explain now. So how we can obtain audit evidence regarding existence and the condition of inventory? Let us try to understand what standard is trying to say, what and all we can do to obtain that evidence regarding existence and condition of inventory. Shall we try to understand, guys? Let us do it now. So now, what does the standard say? See, first keep aside what the standard is trying to say. We will come and understand the technicalities of the standard later. But let me ask you one simple question. You step into the shoes of the auditor. You imagine yourself as an auditor. So assume you are conducting audit of some company X Limited. Now, while you are conducting audit of this company X Limited, you have opened the balance sheet. In the balance sheet, you are able to find something called inventory. Some value is there on the face of the balance sheet regarding inventory. So assume yourself as an auditor. Assume yourself as an auditor. You are doing audit of this company. You are a practicing chartered accountant. You are doing the audit of this company. So if you want to obtain audit evidence, whether this inventory value is correct or not, as I have told, we need to obtain evidence regarding existence of inventory. We also need to obtain evidence about condition of the inventory. So you tell me, if you are an auditor, what you will do? If you are an auditor, what you will do to obtain audit evidence regarding whether this inventory is correct or not? To obtain that audit evidence, if you are an auditor, what you will do? See, what is mentioned in the standard? Don't worry, I will explain. What is actually mentioned in the standard, that I will explain. But I am asking you, you think it from the practical perspective. If you are an auditor, what you will do to obtain audit evidence regarding inventory? So whether inventory is really existing or not, whether the condition of the stock is correct or not, whether the condition of the stock is really of normal quality or of inferior quality. If you want to obtain audit evidence, what you will do? See, if I am an auditor, what I will do is, first step, the only thing which I can do to obtain audit evidence regarding existence and condition of the stock is to do physical verification. To do what? Physical verification. That's what we can do. So that's what we can do. No, if you go and do the physical verification of the stock, by that you will come to know whether that much quantity of stock which is used in the valuation, is it really existing? And what is the condition of the stock? You will come to know when you are present at inventory verification. So what the standard is trying to say here is, as an auditor, if you want to know whether the existence of the stock is there or not, whether the condition of the stock is proper or not, if you want to know about it, you should be present at physical verification. You tell me, guys, who is responsible for doing physical verification? It is whose responsibility to do physical verification of stock? See, this point I have already told you in Caro. Is it the responsibility of the management to do physical verification, or is it the responsibility of the auditor to do physical verification? See, even Caro also we have discussed this point. The physical verification of the stock will be done by management. Who will do the physical verification of the stock? Management. Management is responsible for doing physical verification of the stock. And most of the company's management will try to physically verify the stock as on balance sheet date. Majority of the companies will try to do it. The management of the company will do physical verification of the stock mainly on balance sheet date. Majority of the companies will do it. See why they do it on the balance sheet date. There is a logic for that. Why? Because the stock, whatever is lying on the balance sheet date, that is 31st of March of respective financial year, that only will come in my balance sheet. So what most of the companies will do is they will do the physical verification of the stock as on the balance sheet date. Some companies will do it on other than balance sheet date also. Some companies will do it on other than balance sheet date. When I say other than balance sheet date, close to balance sheet date, some 10 days before, 10 days after, 5 days before, 5 days after. So most of the companies will do it on the balance sheet date. Some companies will try to do it even on other than the balance sheet date, but closer to the balance sheet date. At certain point of time, management will compulsory do physical verification. As I have told you in the CARO, as an auditor, we need to report whether management is doing physical verification of stock at reasonable intervals. For fixed assets physical verification, reasonable interval is once in 3 years. But I told that for inventory verification, for physical verification of inventory, the reasonable interval is once in every year. The management is required to do physical verification of their inventory once in every year. And most of the companies will do it on the balance sheet date. Some companies will do it on other than the balance sheet date. But whatever it is, the management of every company will do physical verification of their inventory. So what SA 501 says is, as an auditor, if you want to obtain audit evidence regarding existence of the stock, condition of the stock, the first step, the first procedure which SA 501 prescribed is auditor shall attend management's inventory counting process. Management's inventory counting process. That is the first thing which is standard is saying. So management of your client company will do physical verification of their inventory, and every management will inform their auditor, sir, on so and so date we are doing physical verification of our stock. So as an auditor, what is your responsibility is you should try to attend that physical verification. Whenever management is doing that physical verification, every management will do it. So whenever the management of your client company is doing physical verification, they will inform you. As an auditor, you should try to attend that inventory counting process done by the management. So assume that I am conducting audit of the client company X Limited. The management informed me that, sir, as on the balance sheet date, as on 31st of March, we are doing physical verification of our stock. Please come and visit us. So now as an auditor, what you should do is, management is doing physical verification of their inventory as on balance sheet date. You should go and attend that inventory counting process. Sir, what I will do by attending there? Management will be doing counting. What I will do? You are supposed to, what you are supposed to do is you have to go to that inventory counting process. So management and their employees, they will be doing the counting activity. It is what is your responsibilities? You sit and observe there. You just chill out there. Don't take extra effort. Don't take any too much of effort. So what you should do is, management will be counting. When I say management will be counting, board of directors will not come and count. So they will assign some employees who will be doing that counting process. So now as an auditor, you will go to the premises whenever the management is doing inventory counting. You will sit there, you will observe what kind of counting they are doing, what processes they are following for doing inventory counting. And if you are sitting there and observing, and if you are feeling bored, you also go and do some random testing. Randomly go to the warehouse, pick up some items randomly. You also try to do the counting and also try to observe the condition of the stock. So as an auditor, the first thing which auditor should do as per SA 501 to obtain audit evidence regarding existence and condition of the stock is, management will be doing inventory counting process. As an auditor, you should attend that inventory counting process. By attending there, what I should do? I should understand how they are doing the counting. I should sit and observe whether they are doing the counting properly or not. If I am feeling bored by sitting there continuously and watching at them, if I am feeling bored, you also go there and randomly do some counting on your own. So pick up some normal items so there will be so many items of stock will be there. Take one random item, you try to do the counting, check whether the physical quantity which is there in the warehouse, the quantity which is there in the books, both are matching or not. You do some test counts and also you try to inspect the quality of the stock. So this is what you are supposed to do whenever the management is doing inventory counting process. See, if the management is doing inventory counting as on 31st of March, we should check whatever stock which they have counted physically as on the balance sheet date, and whatever stock as per books of accounts, both are matching or not. We need to make sure. If both are matching, well and good. Sometimes management will do the inventory counting on other than balance sheet date. Assume that management is doing the inventory counting on 10th of April. They are not doing it on 31st of March. They are doing the counting on 10th of April. Now, the stock which is physically lying as on 10th of April, the stock as per the books as on 10th of April, both are matching. But with this, your responsibility will not get over. You should not just check if the inventory counting is happening on other than balance sheet date, if the stock as per physical verification, and if the stock as per books are matching, well and good. But you need to do the reverse calculation and find out the stock as on 31st of March. Why? Because management might be doing inventory counting on 10th of April. But in the balance sheet, the stock which is there as on 31st of March will be included in the balance sheet. So if you are doing counting on 10th of April, very good. On that day, the stock is matching, well and good. But what you should do is, you should do the reverse calculation and find out what will be the stock as on 31st of March. How to do it? So you will take the stock which is available on 10th of April. To that, you will add back what and all sales or consumption which has taken place from 1st of April till 10th of April, that you have to add back. From that, you have to reduce whatever additions or purchases which are made from 1st of April till 10th of April. Now, whatever balancing figure you get, that will be the stock existing as on 31st of March. Clear? See, if inventory counting, if the management is doing inventory counting as on 31st of March, well and good. You need not do any reverse calculation. If the stock which is lying physically there with the company as on 31st of March and the stock which is there in the books, both are matching, well and good. No extra responsibility. On the other hand, if the management is doing inventory counting on other than balance sheet date, and if it is matching, fine, but you should do the reverse calculation, take the stock on other than balance sheet date. Like I am saying, after the balance sheet date inventory verification is happening, you take that stock, add back whatever sales you have made from 1st of April till 10th of April, reduce whatever purchases you have made from 1st of April till 10th of April. If you do this reverse calculation, you will come to know what is the stock as on 31st of March. So this is what you are supposed to do. So the first step which auditor should do in order to obtain audit evidence regarding existence and condition of inventory, management will be doing inventory counting either on the balance sheet date or other than balance sheet date. As an auditor, your responsibility is to go and attend that inventory counting process and observe how the management is doing the counting, what processes they are following. If you are feeling bored, you also go and do some test accounts and even inspect the quality of the stock. This is what you should do. Now, this is the first step. Very good. Then, see, sometimes what will happen is management will be doing inventory counting. They have invited the auditor also. Sir, we are doing inventory counting. Please come and visit us. Please come and visit. But what auditor has done is he was unable to attend that inventory counting process. Management is doing inventory counting. They invited auditor. They informed auditor, sir, on so and so date we are going to do the inventory verification. They told the auditor, but auditor, because of some emergency or because of some unavoidable circumstances, auditor was unable to attend that management inventory counting process. Management is doing counting. Auditor should have been present, but because of unavoidable circumstances or because of any other reason, auditor is unable to attend inventory counting process done by management. Auditor unable to attend. What is unable to attend? Is unable to attend management's counting process. Whenever management is doing inventory counting, he was unable to attend it. Now what should happen, sir? Now what the standard says is, if you are unable to attend management's inventory counting process, you should do the verification on your own on some alternative date. You should do the verification on your own. See, if you have attended whenever management is counting inventory, your work is less there. You have to just sit and observe. But if the management invited you, if you are unable to attend that inventory accounting process done by the management, now what you should do is auditor himself should do inventory counting on sampling basis on some alternative date. So that means you have to take your engagement team. Assume that management is doing inventory verification on 31st of March. They invited, but you are unable to go. Now what you should do is on some alternative date. Assume that on 5th of April, myself, auditor, I will take my engagement team. I will go to the client's warehouse on 5th of April. I will do some on sampling basis. I will try to do the physical counting of at least a few sample of items. So if you are unable to attend the management's inventory counting process, the standard has give you one alternative route. What they're asking you to do is you have to go to physical verification on your own. You have to take your engagement team and you have to go and do the physical verification on your own on some sampling basis. You need not count 100% of the items. Take a few sample of items and do the inventory counting on your own. So that's why, to the extent possible, you should try to attend whenever management is doing the counting. Why? Because there are responsibility will be very less. We have to just sit and observe. Because of any reason, if you are unable to attend the management inventory counting process, you have to go for physical verification on your own and try to do some counting of at least a sample of items. And you have to do it on your own along with your engagement team. Understood? So these are the two steps. First, auditor should attend management inventory counting process. If the auditor is unable to attend the management's inventory counting process, auditor should do the inventory counting on sampling basis on some alternative date by himself. Now, sometimes what will happen is management did inventory counting, but you did not go and attend that. You thought of doing it on your own on some alternative date, but it has become highly impracticable now. It has become highly impracticable now. Like for example, management did the inventory verification on 31st of March. You did not go because of some reason you are unable to attend. Now you are supposed to do inventory counting on your own. You thought that you will go for inventory counting on 10th of April. But now it has become highly impracticable. You are unable to go for inventory verification on your own. Might be because of natural calamity. Management called you on 31st of March. You did not go. You thought of going sometime later. But now what happened is, in that area where all the stock is kept, where the client's stock is kept, there are serious floods are there. Severe floods are there. So if you go there, you will die. You will get taken away by the water. Are you so sincere auditor? No, if I die also it will be fine, but still I have to go and verify the stock. I have not seen such sincere auditor till now. Definitely I am not the one, but no one will risk the life for one audit. So you are unable to attend management inventory counting process. You are unable to attend the inventory verification on your own because it has become impracticable, either because of natural calamity or some reasons beyond your control. Because of some reasons beyond your control, you are unable to go for physical verification. You did not attend when management called you. You thought of doing it on your own, but because of some reasons beyond your control, it has become highly impracticable for the auditor to go and do the inventory verification of the stock. Now what should happen, sir? Now what the standard says is, if you are unable to attend or if your physical inventory counting has become highly impracticable, auditor should try to do alternative audit procedures to obtain audit evidence. What auditor should do? We should try to think of any alternative audit procedures to obtain audit evidence. Sir, what do you mean by alternative audit procedures, sir? What I can do? Alternative audit procedures means they have left it to your choice. I am an auditor. I am unable to attend inventory counting. And my visiting the inventory myself going and doing the inventory counting, that has become highly impracticable. Now the standard has left it to my choice. You think of any other alternative procedure. You think of any alternative audit procedures. You sit and think what else you can do to obtain audit evidence regarding existence and condition of the stock. So whatever you thought, okay, if I did this, I can obtain audit evidence regarding existence and evidence of the stock. So sit and analyze what alternative audit procedures you can do to obtain audit evidence regarding that stock. Sir, what could be alternative audit procedure? See, there is no hard and fast rule. This will be only an alternative audit procedure. This is completely left to the auditor. Auditor should sit and analyze. Like some of you might say, sir, I will do a video call to know whether really stock is existing or not, to know what is the condition of the stock. I will do a video call, sir. There will be some person who will be there at the warehouse. No, I will do him a video call and ask him to show the entire stock. That could be alternative audit procedure. If you feel that that will give you audit evidence, do it. Or you are feeling that, sir, what I can do is I will do one thing. I will verify the books in a detailed manner. I will check what is the opening stock. I will check what are the additions. I will check all that additions with the invoices. I will check all the consumption or sales. That sales I will check with the invoices. I will get the confirmation from the from those people to whom sales have been made. I will get the confirmation from the suppliers from whom the purchases have been made. I will do this in-depth verification, sir. This could also be alternative audit procedure. So there is no such single standard, there is no such single alternative audit procedure which the standard is prescribing. What the standard simply told is, as an auditor, we are leaving it to your choice. You sit and think what alternative audit procedures you can perform to obtain audit evidence regarding existence and condition of the stock. So if you are able to perform that alternative audit procedures and get the audit evidence regarding existence and condition of the stock, well and good. You can proceed ahead. Clear everybody? So 3 steps I have explained till now. First, we should try to attend inventory counting process whenever done by the management. If you are unable to attend, you have to do the counting on your own on some alternative date on sampling basis. Sometimes attending the inventory counting becomes highly impracticable. Then what you should do? You should try to perform alternative audit procedures. What are alternative audit procedures? That is up to the auditor's choice. Let the auditor himself decide what alternative audit procedures he can do to obtain audit evidence regarding existence and condition of the stock. Sir, if alternative audit procedures are not possible, what is not possible? I sat and analyzed, okay, now I can't go and do the inventory verification. What alternative audit procedures I can do? I thought for 2 hours, but nothing I am able to find out. Or I thought of some alternative audit procedures. I tried to perform, but that is also not giving me audit evidence. Either I am unable to think of any alternative audit procedure, or I thought of some alternative audit procedure, but they are also not helping me out to get the audit evidence. Then what I should do, sir? See, if alternative audit procedures are also not possible, then you have to finally go and modify your opinion. If alternative audit procedures are also not possible, if you are unable to think of any alternative audit procedure, or you try to perform some alternative audit procedure, but that is also not giving you audit evidence, then what you should do, sir? Then you should modify the opinion. Sir, which modified opinion? You are saying, sir, if alternative audit procedures is not possible, if you are unable to perform any alternative audit procedure, then you should modify the opinion. Now, which kind of modified opinion? In modified also 3 categories, no? Qualified, adverse, disclaimer. Which kind of modified opinion you will give? Here you should give either qualified opinion or disclaimer. Either you should give qualified or disclaimer. Why qualified or disclaimer, sir? Is this a case of availability of audit evidence or non-availability of audit evidence? This is a case of non-availability of audit evidence. This is a case of what? Non-availability of audit evidence. Why? Because I'm saying alternative audit procedures are not possible. That means you are unable to perform alternative audit procedures. That means you are not having audit evidence. Since you don't have audit evidence, you are supposed to give either qualified opinion or disclaimer of opinion. So if you are unable to obtain audit evidence regarding inventory, and if that inventory, take for example, in the total 100 crores worth of balance sheet, you are unable to obtain audit evidence regarding 2 crores worth of stock. You are unable to obtain audit evidence regarding 2 crores worth of stock. Even if this 2 crores goes wrong, the possible effect of the misstatement is material but not pervasive. You will give qualified. Assume that out of the total assets of 100 crores, inventory itself is 50 crores. I am unable to obtain audit evidence regarding this inventory. I am unable to perform alternative audit procedures regarding this inventory. Now, if this entire 50 crores goes wrong, the possible effect will not be just material, it is also pervasive. Then I will give disclaimer. So if alternative audit procedures are also not possible, then you have to give the modified opinion. It will be a case of non-availability of audit evidence. You should give either qualified opinion or disclaimer of opinion. Able to understand, everybody? So this is what the standard is trying to tell you, how you can obtain audit evidence regarding existence and condition of inventory. Simple 4 steps, guys. Number 1, management will be doing inventory counting. As an auditor, what you should do? Attend that inventory counting process. What you will do by attending there, you will observe how they are doing the counting. You will evaluate what processes they are following for counting. You also try to do some test counting and inspect the quality of the stock, condition of the stock. Sometimes what will happen is management will do inventory counting. They will inform the auditor, but auditor is unable to attend that management's inventory counting process. Then what the standard is saying, if you are unable to attend management inventory counting process, you should do the verification on your own. You should do the inventory counting on your own on some alternative date. See, sometimes what will happen is you will not be able to attend management's inventory counting, and you will also not be able to attend inventory verification on your own because of some impracticable reasons. Then what you should do? Then the standard simply says try to perform alternative audit procedure. Sir, what could be alternative audit procedure? That is your choice. You think of any alternative audit procedure and try to obtain audit evidence regarding inventory. Sir, if alternative audit procedures are also not possible, if I am unable to obtain evidence, I did not get any alternative audit procedure, or even I got some ideas, but those are also not helping me to get the audit evidence, then what I should do? So then you have to ultimately modify the opinion. Which kind of modification? So either qualified or disclaimer. Why? Because that will be a case of non-availability of audit evidence. So this entire discussion, I try to summarize it in the form of chart here. Okay. So first we will read the content from the material. then we will come back to this chart. Then it will be very easier for us to remember the things. So one part of the standard conceptual understanding we are done. As we have told, SA 501 is going to talk about how to obtain audit evidence regarding three things. What are they? Number one, existence and condition of inventory, completeness of litigations and claims, and presentation of segment information. We are done with one part. Conceptual understanding we are done. How we can obtain audit evidence regarding existence and inventory, existence and condition of inventory. So let us read the standard now. Listen carefully, guys. When inventory is material to the financial statements, the auditor shall obtain sufficient and appropriate audit evidence regarding existence and condition of inventory. So as an auditor, you need to obtain audit evidence regarding existence and condition of inventory. By how you will do it, sir? Now they are going to tell the steps. First thing, attendance at physical inventory counting. So whenever management is doing inventory counting, unless impracticable, you should try to attend that inventory counting process. Done by whom? Management. So write it here, physical inventory counting done by the management. So whenever management is doing inventory counting, what is the first thing which auditor should do? Auditor should try to attend that inventory counting process. By attending that inventory counting process, what I will do, sir? What I should do by attending that management counting process? See, management and their employees will be doing the counting of the stock. What I should do by attending there? Let us see what they are saying. What I should do by attending there? I should evaluate management's instructions and procedures. I should evaluate management's instructions and procedures for recording and controlling the results of entities physical inventory counting. If I put it in simple terms, you should go and analyze there what instructions they have given to the staff for doing inventory counting, in what manner they are doing inventory counting. First I should analyze it, evaluate, analyze management's instructions, how the management instructed their staff to do the counting. So first I should go and analyze what processes they follow, what instructions they follow, in what manner they are about to do the inventory counting. First I should go and understand it. After that, I should sit and observe the performance of management count procedure. So in the first step, I will understand what instructions management is going to follow. Then I will sit and observe whether the staff, management, everybody is doing the counting as per the instructions given to them. Then if you are feeling bored, inspect the inventory. By continuously sitting and observing, you are feeling bored, go there, randomly check the quality of the stock. And also if you are feeling even more bored, even you can perform test accounts also. What even you can do? Randomly you go to some items, you do the test accounting on your own. You check, for example, one item is there, so as per the records some 20 quantity should be there. I will go and count whether really physically also 20 quantity is there in the warehouse or not. So first step is auditor should attend whenever management is doing physical inventory counting. By attending there, what he should do? He should evaluate. First we should analyze what are the instructions management given to the staff. Then you have to sit and observe how they are doing the counting. Then if you are feeling bored, inspect the inventory, and also you can perform test accounts. Clear? See, there was one MCQ. See, when I record the lectures for case scenario based MCQs, you will find a question. In one of the RTPs or MTPs, I guess, in one of the case scenario based question, they have asked a MCQ. See, how they have asked a MCQ is, you will feel shocked how they have asked the MCQ. Audit, they have asked something like this. The auditor shall attend inventory counting process done by management. Done by management and do the following. And what he should do there. Okay. They have given 4 options. Number 1, observe inventory counting, evaluate the management's instructions, perform the test accounts, and also inspect the inventory. This is one option. Okay. Another option, do the test account, inspect the inventory, observe how they are doing the counting, evaluate the management instructions. One more option, evaluate the management instructions, observe how they are doing the counting, inspect the inventory, do the test accounts. One more option, I hope you have got it by now. See, what they are asking you to, what they are expecting from you is whether you will remember the order of the activities or not. I feel this is the most bullshit question I have seen ever. See, ICA should not be doing this. As a student, if you understand the concept, it is good. But you should not even expect the student to remember the points in an order. But that's what they have asked a question here. This is what the question in RTP is. So in every step, you will be in every option, you will be able to find all the 4 steps. But what they have changed, they changed the order. They want you to find out how he will do the 4 activities in one order. So now correct option will be option C. Why? Why? Because if you read the standard, first evaluate, then observe, then inspect, then test count. See how crazy ICI is. They are even expecting you to remember the order, which I believe is one of the most bullshit thing which ICI can do. And even I will argue, okay, sir, first I will go and evaluate what are the management instructions. Then I will sit and observe. First I will do the test account. Then I will inspect the inventory. Have I done something wrong? Did I commit any crime if I change the order? First I have evaluated the management instructions. Then I observed the inventory counting. Then first I performed test counts. Then I did the inspection of inventory. Did I do something wrong there? Definitely not. But still, you have to write everything in the same order. So don't worry, all the questions will not be like this. Sometimes you might expect these kind of questions also. So that's why what I always suggest the students is, if you are unable to attempt for 100 marks, it is fine. Don't worry. If you are unable to attempt for 100 marks in the examination, that is completely fine. See, some people get depressed. They are unable to attempt for 100 marks. They will get depressed. There is no reason to get depressed here. You are not writing some class 10 exam. You are not writing some class 12 exam where you will attempt 100 out of 100 marks, where you will write even choice also. Guys, realize now you are writing the professional exam. What I would say is, if you are able to comfortably, confidently attempt for 75 to 80 marks, you have done a great job. You have done an excellent job. Don't worry. So don't crib, don't get into depression, don't get worried if you are unable to attempt for 100 marks. That can't happen in the professional exams. Don't worry about it. So like this, in examination, there will be these kind of questions sometimes. And if they ask you these kind of questions, even if you write wrong, or sometimes if you feel that I'm unable to remember the order, fine, ignore it, proceed with the next question, read the next question, and then write the answer for that. Okay, sometimes like this, what I should say, sometimes these kind of nonsense questions also will be tested. You should be ready to face it. There will be 20 marks, there will be questions amounting to 20 marks like this. You can have it, you can have these kind of questions, but you should not lose the hope by reading this question. So not all the question paper will be like this, but yes, 20 marks, 15 marks, those for that questions, for that many number of marks, this kind of weird, wicked questions could be there. Get ready to face it. Okay, understood? So in one of the case scenario based MCQs, this is what the expectation of ICI from the students. They are expecting you to remember even how he will do the activities in the order also, which I feel it is a weird thing which ICI has done. Okay, so but whatever it is, for examination sake, number 1, in order to obtain evidence regarding existence and condition of the stock, auditor should attend whenever management is doing inventory counting. By attending that, he should do 4 things. Evaluate what are the management's instructions for doing inventory counting. Number 2, observe the inventory counting process. Number 3, inspect the inventory. Number 4, perform the test counts. And also verify final inventory records to determine whether they match with the quantity of the physical stock. That is what the ultimate purpose of doing inventory physical verification. Guys, why we do physical counting? When I say physical counting, physical verification, both convey the same meaning. What is the ultimate purpose of doing physical verification of stock? To determine that whatever stock that is there in the books, whatever stock that is lying there physically in the warehouse, whether both are matching or not. So as an auditor, you attend that inventory counting process, do these 4 steps, and also finally verify whether the stock as per records and the stock verification done by the management both are matching or not. Next one. If inventory counting is conducted at a date other than the date of financial statements, this also I have told you. See, if inventory counting is happening on the date of balance sheet date, very good. If inventory counting is happening on other than balance sheet date, what you should do? You should do the reverse calculation and find out the stock which is existing on 31st of March. This also we have done now. So issue management is doing inventory counting on 10th of April. Now you should do reverse calculation. I told you, whatever additions, deletions which have happened between the date of balance sheet and the date of counting, do all that adjustments, do the reverse calculation and find out the stock existing as on 31st of March. So that's what they say here. If inventory counting is conducted at a date other than the date of financial statements, the auditor shall, in addition to the procedures required above, perform audit procedures to obtain audit evidence about whether changes in inventory between the count date and the date of financial statements are properly recorded. So if stock as on 10th of April is matching, I need to do the reverse calculation. That is, I need to add all the sales etc. happened between 1st of April till 10th of April. I need to deduct whatever purchases that are made between 1st of April to 10th of April. I do the reverse calculation and find out the stock as on 31st of March. So now if the stock as on 10th of April is matching, I should also obtain audit evidence that whatever between the date of counting and between the balance sheet date, whatever additions, deletions happened, whether they are properly recorded or not. So if I did the verification on 10th of April and if the stock is matching, if the proper recording of transaction has been done, whatever transactions that have taken place from 1st of April till 10th of April, if these transactions are correctly recorded, then I can do easily the reverse calculation and find out the stock existing as on 31st of March. So that's what they say here. Once again, if I read it, if physical inventory counting is conducted at a date other than the date of financial statements, the auditor shall, in addition to the procedures required above, perform audit procedures to obtain audit evidence whatever changes in the inventory are there between the date of financial statements and the date of counting, whether they are properly recorded or not. Okay, so this is the first step, attend management's inventory counting process. Next one, if the auditor is unable to attend physical inventory counting done by management due to unforeseen circumstances, the auditor shall make or observe some physical counts on an alternative date and perform audit procedures on intervening transactions. So if you are unable to go and attend the inventory counting done by the management, what the standard is asking you to do, you go and do the inventory counting on some alternative date. Like management did the inventory counting on 31st of March. Management has done the counting on this date. I am unable to attend. So now what I should do, on some alternative day, I have to take my engagement team and do the counting on my own on sampling basis. So assume that I did the counting on 15th of April. But as we know, the stock as on 15th of April will not come in the balance sheet date. Which stock will come in the balance sheet? The stock which is there on 31st of March will come in the balance sheet. Now if I did the counting on 15th of April, if the stock if the stock in the warehouse, if the physical stock as on 15th of April and the stock as per books on 15th of April, if both are matching, what I should do now? I should find out the stock which is existing as on 31st of March. How I should do it? By doing once again reverse calculation. So I will take the stock which is there existing as on 15th of April. I should add whatever sales or whatever consumption of the stock which has happened between 1st of April till 15th of April. Similarly, I should reduce whatever purchases or whatever additions which are made between 1st of April till 15th of April. So if I reduce it, whatever balancing figure you get, that will be the stock existing as on 31st of March. So this is what the meaning of intervening transactions. So if you read this paragraph once again, so you should make or observe some physical counts on some alternative date and perform audit procedures on intervening transactions. What do you mean by intervening transactions here? Those transactions happening between the date of auditor's counting and the date of financial statements, whatever transactions which are happening between them, that we call it as intervening transactions. We should verify that intervening transaction, that is, do the reverse calculation and find out whether the stock as on balance sheet date is correct or not. Clear? So I have explained two steps. Number one, whenever management is doing inventory counting, auditor should go and attend. Number two, if you are unable to attend the management inventory counting process, auditor should himself go and do the inventory counting on some alternative date. Matters relevant in planning attendance at inventory counting. See, when you go and do the inventory verification, when you are taking your engagement team and going and doing inventory verification, what things you will try to cover in your inventory counting, or what points you will pay attention when you go and attend that inventory counting process. So what points you will pay attention? So that's what this fourth point says, matters relevant in planning attendance at physical inventory counting. That means when you go and do the inventory counting on your own, there are some points which you need to keep in mind. There are certain things which you need to pay attention. What things I need to pay attention? I need to pay attention to what is the nature of inventory. Whatever stock that is there with the client company, what is the nature of the stock? Is it raw material? Is it work in progress? Or is it finished goods? Stages of completion of work in progress. If it is work in progress, what is the stage of completion? 60%, 50%, 30%, 40%. So try to determine stages of completion of work in progress. The risk of material misstatement related to inventory. You have found the inventory. What chances of misstatement could be there in the inventory? Like, are there internal controls? Are there no internal controls? Is there is a store in charge? Are there proper inventory records? CCTV camera is there or not? Security guards are there or not? You should even pay attention what kind of risk of material misstatement can happen in inventory. And also the nature of internal controls. When I just now, as I've told, nature of internal control, like CCTV camera should be there, store inventory records should be there, along with that security guards should be there, they should be monitoring of CCTV camera surveillance. So all these internal controls are there or not, this also you should pay attention. Whether adequate procedures are expected to be established and proper instructions are issued for physical inventory counting. Even you should give proper instructions to your engagement team member. When you are taking your engagement team members for doing the inventory physical counting, you should give them proper instructions how to do the counting, which item should be selected, which item should be counted. So how you are going to determine the sample, that instructions also should be given to the staff. The timing of physical inventory counting, you should also pay attention when you are going for physical inventory counting. And so timing also mean one more thing, how much time you have to spend on physical inventory counting. Will you spend 1 day, half day, 2 days? So within what time you will try to do physical inventory counting, that timing also you should decide. Whether entity maintains a perpetual inventory system. What kind of inventory system your client is maintaining? Is it a periodical inventory system or perpetual inventory system? I hope you know it. See, in costing you might have covered. Perpetual inventory system. What do you mean by perpetual inventory system? As and when the transaction takes place regarding inventory, immediately entry will be recorded. Like for example, today I made some purchase of inventory, immediately inventory records will be updated. Today I made some consumption of inventory, immediately inventory records will be updated. That we call it as perpetual inventory system. Whereas periodical inventory system means once in a while records will be updated. Once in a month, once in a year records will be updated. Which one is much better? Perpetual inventory system is much better. Next, the location at which the inventory is held, including the materiality of the inventory, risk of material misstatement at different locations, in deciding at which locations attendance is appropriate. See, if the client is keeping locations, if the client is keeping inventory at various locations, try to understand at how many locations inventory is kept. Where there is a risk of material misstatement, at which location there is a high risk of material misstatement. I will try to go into the physical verification at that location wherever the risk is higher. Next, whether the assistance of auditor's expert is needed. Sometimes you will not be able to verify inventory on your own. You might be required to take a help of expert. Like for example, if you are conducting audit of an oil company, in case of oil companies, the stock will be in the liquid form. They will have huge barrels equal to the size of the building. In that barrels, quantity of oil will be there. They say that, sir, in this barrel some 100 liters of oil is there. They will say in this barrel 100 liters of oil is there. How you will come to know whether 100 liters of oil is there or not? How we can get to know about it? So how we can get to know is, we can get to know about this quantity of oil in the barrel by taking the help of some engineer. So if you take some engineer's help, he will, as I've told, he will give you some tool by which you can go and dip it in that container till whatever level that tool is getting dipped, that many liters of oil will be there. So there, in these kind of cases, you need to take the help of an expert. Example, you are conducting audit of a pharmaceutical company. See, in the case of pharmaceutical company, they have hazardous chemicals in their stock. So just like that, you can't go inside the hazardous chemicals. You have to take the help of some chemical engineer or some expert you will need. Why? Because you have to handle that chemicals with care. Without proper precautions, if you go and touch that chemicals, no, you will go for inventory verification. You will never come back. So like this, in some cases, when you go for inventory counting, you might need the help of expert. So determine whether any such help is needed. So these are the points which you need to keep in mind when you go and do that inventory counting on your own. Next one. Attendance at physical inventory counting is impracticable. See, sometimes what will happen is, management did the inventory counting, I did not go. I thought of doing inventory verification on some alternative date. That did not happen. That has become highly impracticable. Now what I should do? So as I have told, what you should do, perform alternative audit procedures. So that's what they say. If attendance at physical inventory counting is impracticable, the auditor shall perform alternative audit procedures to obtain sufficient appropriate audit evidence regarding existence and condition of inventory. If you are unable to, if physical verification becomes highly impracticable, then you should try to perform alternative audit procedure. Sir, what could be alternative audit procedure? That could be anything. You have to sit and think what alternative audit procedures you can perform. For example, they are giving an example of alternative audit procedure. Inspection of documentation of subsequent sale of specific inventory items acquired or purchased prior to physical inventory counting. So what they try to say here is, one alternative audit procedure could be checking the subsequent sales. One alternative audit procedure could be what? Checking the subsequent sales. Assume that the management is saying as on 31st of March, they have stock, raw material A is there, or they have some item A, product A. There are 1,000 units of stock, 1,000 quantity of stock are there as on balance sheet date. This is what the client is saying. Now I want to know whether really this 1,000 quantity of product A is there as on balance sheet date. Now I can't go and do the physical verification. Why? Because it has become highly impracticable. Now I should perform alternative audit procedure. One example of alternative audit procedure, what they are saying is verify subsequent sale of product A. Check whether any subsequent sale of product A is there. I'm able to see that on 10th of April, the company sold 900 quantity of product A. On 10th of April, the company sold 900 quantity of product A. From 1st of April till 10th of April, there is no single purchase of product A. From 1st of April till 10th of April, there is no single purchase. But still, company was able to sell 900 quantity of stock when on 10th of April, which means that this 900 quantity of stock should have been sold from the closing stock, which is there as on balance sheet date. Yes or no? If in this financial year from 1/4 to 10/4, if there is no single purchase of product A, but still on 10th of April, they are able to sell 900 quantity of stock. That means this 900, out of this 1,000 quantity, I have got evidence for 900 quantity of stock. So definitely 900 quantity of stock is existing when as on balance sheet date. How I got to know it? By checking subsequent sales. So this also could be one of the alternative audit procedure. So sometimes checking subsequent sale invoices also could be one of alternative audit procedure. Just give me a minute. My laptop is running out of power. Just let me charge it. I will be back in a minute. Yeah, let us resume. So this verifying of subsequent sales also could be one of alternative audit procedure. So just they are giving example, but as I have mentioned guys, there is no list of alternative audit procedures. That is completely up to the auditor's choice. So the auditor himself has to sit and decide what else I can do to obtain audit evidence. So that alternative audit procedure you have to perform. Next. If the auditor is unable to obtain audit evidence by performing alternative audit procedures, then he should consider modifying his opinion. If you are unable to perform any alternative audit procedure, then you have no other option. You have to modify the opinion. Guys, which kind of modified opinion you have to give? Since it is a case of non-availability of audit evidence, you should give the modified opinion, and that modified opinion will be either qualified opinion or it will be disclaimer of opinion. Why either qualified or disclaimer? Why? Because it is a case of non-availability of audit evidence. Next one. This point is very important for true or false statements. This last point. The matter of general inconvenience to the auditor, however, is not sufficient to support a decision by the auditor that attendance is impracticable. So what is the meaning of this sentences? See, I'm saying that when verification is impracticable, then you should perform alternative audit procedure. Now what auditor is doing is, assume that the client's office is located 10 kilometers away. The client's office is located 10 kilometers away. If you have to go and attend that inventory counting process, you have to book a cab. For that cab, you have to pay 500 rupees. Or you need to travel some 30 minutes for going and attending that inventory counting. So auditor is saying that since I have to incur 500 rupees of cab charges, since I have to travel for half an hour, that is a reason for impracticability. Can you use that as a reason for impracticability? See, when I say if physical verification is impracticable, impracticability should have arisen because of reason beyond your control. You can't say I have to spend more time for doing inventory counting. I have to incur some cost for going and doing inventory counting. That is a reason for impracticability. I will perform alternative audit procedures. Can you say it like that? No. So if you have some general inconvenience, that general inconvenience, you can't say it as a reason for impracticability. See, when I say impracticability, that impracticability should have happened because of some reasons beyond your control, like floods, some natural calamity, or some social riots are happening. So these are something beyond your control. You can't say I have to book a cab, I have to incur some charges, I have to spend some time. That is a reason for impracticability. I will do alternative audit procedures. Can you say it like this? No, those are not impracticabilities. When I say impracticability, impracticability should have caused because of reasons beyond your control, not because of your general inconvenience. So that's what they say here. The matter of general inconvenience to the auditor, is not sufficient to support a decision by the auditor that attendance is impracticable. You can't use these silly reasons for saying that physical verification is impracticable. And also the difficulty of time, the difficulty of cost involved is in itself not a valid basis for physical verification impracticability. As I mentioned, there is a difficulty of time. That means I have to spend some time in inventory verification, or there is a difficulty of cost. I need to incur some charges for going and doing the inventory verification. Can I use this as a reason for impracticability? No, this can't be treated as a reason for impracticability. So this sentence is very important for true or false statements. The difficulty of time or cost involved in itself is not a valid basis for physical verification impracticability. The meaning of this sentence is you can't use difficulty of time, you can't use difficulty of cost as a reason for impracticability. See this sentence, how they can test you in the examination is they will say the difficulty of time or cost in itself a valid basis. They will remove this term not and they will ask you as a true or false statements. So you should say no, the given statement is false. The difficulty of time or cost involved is not a reason for physical verification impracticability, which means you can't use time and cost as a reason for impracticability. And also you should add this line also, the matter of general inconvenience to the auditor is not sufficient to support his argument of impracticability. So when I say impracticability, it should have caused because of reasons beyond your controls like some natural calamity, etc. It should not be something which you are creating. Clear? So this is what happening. So 4 steps simply if I have to put it. So this I have summarized in the form of a chart. So as I have told, this chart will be shared with you. So say flow charts. So see here, existence and condition of inventory. First step, auditor shall attend that management inventory counting process. And what he should do by attending that? Evaluate the management process, observe the management counting, inspect the inventory and perform the test count. Auditor, in case if he is unable to attend, if unable to attend management counting process, auditor should do the physical verification by himself. If physical verification becomes impracticable, then auditor shall perform alternative audit procedures. If alternative audit procedures are also not possible, modify the opinion. Which kind of modification? Either qualified or disclaimer. Now, regarding existence and condition of stock, they try to say one more thing here. So what is the last part, guys? Once we complete this paragraph, first item of the standard will be over. So what is the sixth point is, sometimes your client will be owner of the stock, but the stock will not be there in the custody of your client. Your client will be owner of the stock. Inventory will be recorded in the books of your client, but your client is not having the possession of the stock. The stock is not in your client's custody. Can it happen? Can it happen? Or if I put it in simple terms, could it happen where you are the owner of the stock, but the stock is not there in your custody? Can it happen? Yes, it can happen. When it can happen? In the case of consignment. So assume that consignor is there. Okay. Consignor has sent 1000 quantity of stock to consignee. Now, as on 31st of March, this 1000 quantity of stock is still there with the consignee. Now you tell me this 1000 quantity of stock as on 31st of March, which is there with the consignee, it should form part of whose balance sheet? Will it form part of consignee's balance sheet or will it form part of consignor's balance sheet? It will not form part of consignee's balance sheet. It should form part of consignor's balance sheet. So this 1000 quantity of stock will be shown in the balance sheet of consignor. So your consignor is the owner of this 1000 quantity of stock. But is that 1000 quantity is in the possession of your client? No, it is not in the possession of the consignor. It is there in the possession of consignee. Or goods you have sent it on sale or return basis. Goods sent on sale or return basis. Assume that your client company X Limited is there. They have sent some 500 quantity of goods to another company Y Limited on goods on sale or return basis or goods sent on approval basis. So now the approval period is still lying. So you have sent the goods on 20th of March. You gave them 20 days of time to either accept or to either reject. In between 31st of March has come. As on 31st of March, the the time limit given to the Y Limited is not yet over. So 500 quantity of stock has been given to Y Limited on sale or return basis. Okay. So now this 500 quantity of stock, which is there in the custody of Y Limited as on 31st of March, it should form part of whose balance sheet? It will form part of X Limited balance sheet only. So stock is the owner. This X Limited is the owner of the stock. This stock will form part of X Limited balance sheet, but this stock is in the custody of Y Limited. Or when you send the goods on job work basis, when you send the goods on job work basis, assume that Raymond is there, Raymond's. Now this Raymond's has sent 500 meters of cloth for printing to another person. So there is some printer, they have sent 500 meters of cloth for printing. Now this printer will do the printing and return back that 500 meters of cloth. In between, balance sheet date has come. Now you tell me this 500 meters of cloth which is there with the possession of the printer, will it form part of Raymond's or this printer's balance sheet? It will form part of Raymond's balance sheet. Why? Because Raymond's is the owner of the stock, but the possession is lying there with printing agency. So like this, sometimes what will happen is stock will be included in your client's books of accounts. Stock will be there in your client's balance sheet. But your client will not have the custody. The client, some other person, some other third party will have the possession of the stock. Now, if you are conducting audit of this company, take for example, if you are conducting audit of the company X Limited, in their balance sheet, there is some 500 quantity of stock. See, if the stock is there with the client company, you would have done the physical verification. But the stock is not there with the client company, the stock is there with the consignee, or the stock is there with the job worker. Now, are you required to obtain evidence regarding that stock also or not? Definitely yes. Since that stock is forming part of your client's balance sheet, everything which is forming part of your client's financial statements, you need to obtain evidence. But here there is a problem. If the stock is with my client, I would have done the physical verification. But the problem here is the stock is not there with the client, the stock is there with some other party. It is in the custody of somebody else. Sir, how I can obtain evidence regarding the stock which is there in the custody of a third party, sir? That also this SA 501 will try to explain. Very simple things it will try to say. What you can do is, in order to obtain evidence regarding the stock which is lying with the third party, you should try to obtain external confirmation. What the auditor should do? Try to obtain external confirmation. What do you mean by external confirmation? Directly go and ask the consignee. Sir, I am the auditor of this company. My client is saying that you are a consignee. You are holding 1000 quantity of stock. Please confirm whether you are having 1000 quantity of stock or not. I am conducting audit of Raymond's. 500 meters of the client is saying that Raymond's is saying that, sir, 500 meters of cloth is there with the printer. We don't have it. So we have given it to job work for the printer. Now what as an auditor I can do is I will directly write a mail to the printer. Sir, my client is saying that you are having 500 meters of cloth belonging to my client. Do you really have it? So like this, one main thing which you can do to obtain evidence regarding the stock which is held in the custody of third parties to obtain external confirmation. So that's what they say here. If you read it, when inventory is under the custody and control of a third party and it is material to the financial statements, the auditor shall obtain sufficient and appropriate audit evidence regarding the existence and condition of that inventory also. By performing what, sir? If the inventory is in the custody of third party, how as an auditor you can obtain audit evidence regarding it? Number one, request the confirmation from the third party. You have to obtain the confirmation from the third party regarding the quantities and what is the condition of that stock. You can directly ask the external confirmation from the third party. See, sometimes you performing external confirmation alone will not be enough. Sometimes performing external confirmation alone will not be enough. Sometimes you will have a doubt. When you will have a doubt is that third party, whoever is holding the stock, is a related party of your client. Then you can't believe only on external confirmation. If the third party with whom the stock is held, if he is an independent party, if he is not related to the client, if you get external confirmation, that will be enough. But in some cases, getting external confirmation alone will not be enough. When, sir? When the third party is a related party of your client. Then obtaining confirmation alone will not be enough. You need to perform extra procedures also. What extra procedures you need to perform? You need to do inspection or other audit procedures appropriate in the circumstances, like attending the third party premises. See, your client is selling the stock is there with the consignee. You asked the confirmation. Consignee gave the confirmation, but you still have a doubt. Might be consignee is giving me wrong confirmation. Now what you can do is, if possible, you can go and attend that premises. You can go to consignee's premises also and check. Or arranging another auditor for verifying the stock with the stock held with third party. Or assume that your client is located in Karnataka. Your third party, that the consignee, is located in Tamil Nadu. Now what you can do is, if you still have doubt, even after confirmation, even after getting confirmation also, you still have a doubt whether consignee is giving me correct information or not. Now you know a chartered accountant, you know a friend who is there in Tamil Nadu. You can ask him to go and check the consignee's premises once, whether really that much quantity of stock is there or not. Or checking the appropriate documentation. Or if you have any documentation, Like for example, whenever consignee is sending the stock, he's sending one statement. Whenever consignee is making sale, he's giving confirmation. Periodically he's sending what quantity of stock is available with him. So like that, if any appropriate documentation is there like invoices etc., that also you can check it. Clear everybody? So if inventory is lying in the custody of third party, you need to obtain evidence regarding that inventory which is lying in the custody of third party also. How you can obtain audit evidence? Number one, you try to obtain external confirmation. If confirmations are not that reliable, you can perform other audit procedures also. Like what you can do, if possible, try to visit that third party's premises, or try to arrange another auditor who will go on your behalf and check the inventory with the third party, or if any other documentation is available, check that documentation. So whatever it is, you can do all this to obtain the evidence which is lying in the custody of third party also. That's all. So this is what SA 501 is asking us to do in order to obtain evidence regarding existence and condition of inventory. Guys, everybody clear? So a lot of discussion we had, but all this discussion is very important, and particularly SA 501 is very, very important. Most of the times they are going to compulsory ask the question from SA 501. From the last few attempts it is happening, compulsorily they are asking one question from SA 501. So that's why at least on we have completed only half of the standard. On half of the standard alone, we have spent 1 hour of time, but all this time is worthy. Clear? So we'll end our discussion here. We will resume our discussion. We'll talk about the remaining two aspects and how to obtain evidence regarding the remaining two aspects in our next class. So that's all for this session, guys. See you again in the next class. Bye. Take care.